Today I'm going to talk about Bitcoin, gold and silver. Here is a gold coin. Let me get into focus. There's a gold coin, solid gold, 1 ounce, worth about £1 sterling, about $1,200 odd dollars. This is a ounce of silver coin, worth about £15 maybe, $18, that kind of thing. And here is a Bitcoin. Now you may think there's a lot of difference between these three coins, but in fact they're remarkably similar, because what we value them at is based on human opinion. But there's really no more value in this coin than there is in a Bitcoin. It's purely a matter of opinion. Certainly we know the current price. We can go on to numerous websites. We can see the quote for gold, the quote for silver, and the quote for Bitcoin. And you may say, well, the gold and the silver are a much better bet. They've been around for thousands of years, and we take some comfort maybe from that. But ultimately, if you look at the chart going back 10, 20 years, you'll see the price fluctuates a lot, and it's really a matter of opinion, and there's no reason why Bitcoin should fall back any more sharply than gold or silver. In fact, we're seeing the opposite. We're seeing Bitcoin shoot ahead, and the other cryptocurrencies, whereas gold and silver are currently stalling. I'll be looking at this in a bit more detail later in this presentation. Right, I just want to give you a brief outline. One of the charts I'm going to show you shortly is the depreciation in the Roman denarius around AD 56 to 256 AD or thereabouts. At that point, the Roman authorities reduced the silver content, remember this stuff here, in the denarius from I think almost 100% down to I think less than 1%, thus achieving what our governments today achieve by a more mechanical process. But the Romans, I say, just use a mechanical process, whereas these days the governments have far more wonderful and varied ways of knocking the six out of our currency. Now, it's quite important that to realise that if you debase the currency, you actually destroy the economy, and you can in fact destroy the whole empire, as the Romans found to their cost. I think it was Lenin who said that there's no surer way of debasing a country than by debasing the currency. And that was quoted by one of our more famous economists, whose name I will remind myself of when we get to the presentation of the charts, etc. Now, it's because of this drop in the value of our various currencies, dollars, euros, pounds, etc., etc., that I believe is fueling the price rises in the cryptocurrencies, Bitcoin in particular, plus of course the way that you can transfer currencies around the world. So the Chinese have a fairly oppressive government as regards to currency restrictions. So by using Bitcoin, the Chinese can get cash out of China around the world, and it's this kind of usefulness added to a distrust of governments, added to the need to be able to circumvent their regulations, which become more and more oppressive all the time as far as I can see. Although of course I live in Spain, and Europe is a much more I think fair-minded, although I think that's changing as well to an extent, as the politicians get ever more desperate for more and more cash. I'd say the Romans did this first, or perhaps not first, but that's the first example I'm aware of, and of course prehistory is beyond 3,000 years BC, so I mean, the Romans were the first millennium after Christ, so we're looking as far back as we can go perhaps. I'm not sure we have records of the Babylonians and various other sort of civilizations which existed prior to that. So anyway, one of the points I want to make is that it's my view that as a economy evolves, as an empire grows, that it's probably inevitable that the currency will get debased. We all want more all the time. We want better standards of living, better quality of living, etc., etc. The politicians want to get re-elected, and they want to spend money. And I think it's probably inevitable that this debasement will take place. Now, it's a good thing when it starts. I mean, for example, the whole process begins, I think, when you can borrow money to buy your house. Now that's clearly a good thing. I did that myself. You've got somewhere to live, you take pride in where you're living. It's a great step to improving your quality of life. But as you repeat that process again and again and again, all this cash flows into the system, and you get the situation where you get currency debasement. And it goes too far. I think it's part of the human experience that everything is taken to an extreme, and it becomes a problem, which is as we're facing now. As money flows into the various assets that are around the place, those assets become overvalued, even on the basis of the devalued currency. I mean, for example, the US dollar in 71, $1 then is now 3 cents now. I mean, that's a 33% depreciation. Sorry, 33 times depreciation, 3,300% in 40 odd years. That's a fairly incredible amount. It's much easier to become a millionaire today, for example. It's 33 times easier to become a millionaire today than it was in 1971, because the value of the millionaire's holdings are reduced by 33 times. So what's worth $1 million in 1971 dollars is now worth about 30,000 today. So a millionaire today is nowhere near what he was back at that point in history.
Okay, this is the slide presentation part of the overall webinar. Trading as a business, I'd like to repeat that because many people don't treat trading as a business, and although it's a personal choice, I've got nothing wrong at all. People want to use trading as a hobby. It makes quite a good hobby, I think. But if you want to make money, then you've got to treat it as a business. And there are, of course, two distinct factors which will determine how well you do in any year, and that is the markets themselves and you. Now, we cannot control markets, but of course you can control yourself. Well, having said that, of course, it's not always that easy, as we all know. But basically what you do this year and next year is far more important than what markets do. How I trade? Well, I try and catch the big move. That's my main occupation. This is what gold and silver is all about. And this is why I'm looking at Bitcoin. I think the big move there will continue. It will, of course, have setbacks, and they could be quite vicious, but I believe the trend is up and will stay up for at least a few years yet. So I think there's a lot of opportunity in the cryptocurrencies and in gold and silver, actually. Nice moves today. It's, yes, 22nd away. And gold's made new highs and homing in on 1300, which is the key level, and silver's also looking quite good. So I think we're going to see very strong rallies in gold and silver quite soon. So that's really my main occupation. I also write options, mainly on the DAX from time to time. It's a fairly small part of my overall trading, and I have systems like A-B, which is also known as Kraut Gap. Otherwise, I quite like opportunistic and predatory trading. For example, when BP got into trouble a few years back, and RBS in 2009 it went down to 10, are good examples of the way I'd look to trade markets. Right, so this is the chart I mentioned in the first presentation, the silver content of the Roman denarius, and you'll see that from a base here at from 100% it went down to almost 0% silver content between 64 AD and 2620 AD, which sort of set up the scene for the collapse of the Holy Roman. I'm not going to show any other charts of pounds, dollars, euros, etc. The same things basically happened to them over the last 50, 100 years, going back beyond that, I think. And if you want to do the research, you can find unlimited numbers of charts yourselves. And it's always better to do your own research, because that way you learn so much more. Right, in the first part of the video I took, I mentioned this saying that John Maynard Keynes said. Lenin is said to have declared that the best way to destroy the capitalist system was to debauch the currency, and Lenin was certainly right. There is no subtler, no surer means of overturning the existing basis of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction, and does it in a manner which has not one man in a million can diagnose. This is fairly serious stuff. I mean, it affects us all in many ways. It affects particularly at the moment people who have saved up during their lifetime. who now find that their savings not worth what they were. It rewards, of course, people who live on debt. I'm not saying it's a bad choice, but it's a dangerous choice. I've had problems myself with debt in years gone by, and I was fairly lucky to be able to clear it within 6 months or so. But that it doesn't always happen, and it's not a good thing really. Also, is it a good thing to reward people who get heavily into debt rather than the people who actually save for their and plan for the future? One could debate that all night. There's pros and cons both ways, I know. Okay, now go back to the video presentation.
So I want to continue this by talking about Bitcoin. I started what I call my Bitcoin business back in November 2016. It's almost the 6-month anniversary of that process beginning. And I started it by buying some mining shares via a company called BitClub Network. Now, what is happening? What I actually did was, or what I am doing, is I combined 3 separate activities: investing. So I've been accumulating Bitcoin and several other cryptos, which I'll be talking about in a while. Plus business. So I'm mining Bitcoin. I'm also mining Ethereum. I'm mining Zcash and Dash. But I'm also recommending. It's not recommending. I'm making people aware of the opportunity. I think this is a big bull market. Well, it obviously is a big. There's no doubt about that now. I mean, Bitcoin's up above $2,000. I got in when it was $700, so it's almost trebled now, all by itself in 6 months. Last month I bought some Dogecoin, I bought some Stellar, Zcash. Now some of these are up 10 times in a month. So I just bought a range of cryptos, about 10 or so, and I put those about £200 into each, and now some of those are worth £2,000. But all this is being fueled by the initial mining shares and the commissions I receive when I introduce other people into the same deal. And it's such a good deal. I mean, today it's just been money's been pouring from everywhere. It's quite unbelievable. In fact, it's always upsetting. It's actually made me question my values, as it were. I think we all have a sort of limit on what we feel is appropriate. And right now, my limits are being tested. And the money keeps coming in, it's quite bizarre. And well, I mean, I have no idea whether it will continue. But the great thing with the mining shares, and this is why I recommend them, is that I paid $300,000 for three separate pools, and when I bought them, they were churning out Bitcoin at $700 a go. They were worth, each Bitcoin is worth $700, but the mining shares just keep going. So the fact that Bitcoin is now $2,000 means I'm getting the same Bitcoin, but they're now worth a lot more. So this is a great way of getting in on this. You may not want to buy Bitcoin at $2,000, but you can buy the mining shares at the same price I did 6 months ago, $3,500, and you can start the process rolling. And I've been reinvesting the cash I've got from my mining shares. I take some in cash, I reinvest some so that the mining shares keep continuing growing, and I reinvest those profits into Bitcoin, into Ethereum, and into more mining shares. I've doubled my mining shares by buying more. My coins just keep multiplying, and it really is quite a heady experience. What's going on with this, and it seems very unlikely it's going to come to a sudden crunch. I gave a seminar in London a few weeks ago, and very few people in the audience had any exposure at all to cryptocurrencies. And whilst that remains the case, I believe that this bull market will keep on rampaging forwards, and that this is a great opportunity for people who would like to be part of that process and be part of the spreading the word, as it were, giving the opportunities to other people, so that they too can benefit. I mean, obviously, there's no guarantees. I've stayed with my dictum of investing a small amount. Well, my small amount was $4,000, and I've now got about $20,000. That's within 6 months. So it's getting less small, and if I can replicate that kind of growth over the next 6 months and the 6 months beyond that, then within a fairly short period of time I will have a few $100,000 in this business. And it'd be great if other people wanted to get involved in that and achieve the same thing, because it's not difficult to do. In fact, it could become a full-time occupation. You know, it's the amount of money that's being produced. I mean, for me, it's not life-changing. I'm a fairly wealthy guy anyway, but it's extremely interesting, and I think you might find it well, it's certainly enjoyable, and being part of something which is changing the world in a very positive way, away from the governments and the politicians, and giving people the opportunity of avoiding the problems that these people create, even though they're trying to help and sort things out in the process. But what they're actually doing is creating issues which we could perhaps do without.